Welcome to another bar walkthrough video from SuperfastCPA. I'm Logan, and in today's video, we're going to be going over bar area 3. This is section B. This is another application topic. Prepare the schedule to reconcile the total fund balances and the net change in fund balances reported in the governmental fund financial statements to the net position and change in net position reported in the government-wide financial statements. And we're going to be doing that the SuperfastCPA way, which is diving straight into the questions to learn the material. Now, if you don't know much about our strategies, make sure you go to SuperfastCPA.com and sign up for our free 1-hour webinar training. In that 1 hour, we will teach you the key ingredients to passing the CPA exam so you don't waste months or even years of your time failing exams. And after you watch that, you're going to want to learn more, so make sure you also check out buying our study materials or buying our pro course, or of course buying the total bundle, which includes everything. And something that will be included with the study materials, it's currently included with the pro course, but we're going to change that in the near future. Something that's included with the study materials is the full 10-question versions of these videos. So in today's YouTube version of the video that you're watching right now, we're only going to be going over 5 questions. But for people who purchase these study materials for certain sections, they will be able to watch the 10-question versions of the videos to get a little bit more help and a little bit more understanding. So if you like this, make sure you check out buying the study bundle or of course the total bundle, which will include the study materials and the pro course. And with all that said, let's dive straight into the questions. All right, here we are at question 1. Something I always like to point out as a good strategy is reading the last sentence of the question first. You might not feel like it is always helpful, but it's a very good habit to be in because on exam day, especially, you have no idea what you're going to be seeing. So you're going to open a question and you don't know what the question is about. But if you read the last sentence of the question first, very frequently it will give you context or give you an idea of what you're dealing with in that question so that you know what to be looking for and what to be thinking about as you're going through the question. So let's do that here. What amount should the city report as governmental activities net position in the government-wide statement of net position? Okay, so immediately, imagine you were on exam day. You now know you're dealing with net position and governmental activities. So let's go to the top. A city reported total fund balance of $480,000 in its governmental fund balance sheet. The city's general governmental activities also included capital assets of $900,000, accumulated depreciation of $250,000, and long-term bonds payable of $375,000. So again, what amount are they going to report as governmental activities net position in the government-wide statement of net position? Now, if you remember the last video, we kind of talked about some of this. A lot of what we learned in the last video is going to transfer over, or at least the concepts will. If you have an idea of how to do this, that's great. Maybe pause the video and try this on your own. But if you don't know, that is okay. The whole point of these questions is to learn from them. So let's go ahead and take a look at the answer to start learning how to do this. All right, here we are. The answer is A. It would be $755,000. Again, if you have no idea how we even got to that, that's okay. We're going to walk through this and you'll start understanding it. Governmental fund financial statements focus on current financial resources, so they do not report general capital assets or long-term liabilities in the same way as the government-wide financial statements. If a capital asset was purchased by a governmental fund, the purchase would generally have been reported as a capital outlay expenditure when the asset was acquired, which means they didn't record an asset, they just recorded an expenditure. And this is for the governmental funds. If long-term bonds were issued, the governmental fund would generally have reported the bond proceeds as an other financing source when the debt was issued. Again, instead of reporting something like an asset or a liability, they would have reported this other financing source, rather than continuing to report the long-term liability on the governmental fund balance sheet. So that's something right there. We're learning about governmental fund financial statements. We learned a little bit about them in the previous video, but remember, they aren't treating long-term assets and liabilities the same as the government-wide financial statements. So let's go through the rest of this. Government-wide financial statements use the economic resources measurement focus and full accrual accounting. Because of that, governmental activities report the capital assets, accumulated depreciation, and long-term bonds payable. The city would calculate governmental activities net position as $480,000 of the fund balance. That's the starting position. Remember, we're trying to get from the fund balance to the net position in the government-wide financial statements. So $480,000 for the fund balance plus $900,000 of capital assets because it wasn't originally included in the fund balance, less $250,000 of accumulated depreciation. Again, that wasn't originally included in the fund balances, less $375,000 of bonds payable. That was also not included. So now we're at $755,000 as the net position in the government-wide statement of activities. So again, we're going from the fund balance to the net position. Capital assets are added because they are included in governmental activities. while accumulated depreciation and long-term bonds payable are subtracted because they reduce governmental activities net position. So again, we're trying to get from fund balance to governmental activities net position. And you can see there we started with the fund balance and then added and subtracted some things that weren't originally in the fund balance but needed to be in the net position. So we learned a little bit there. Now let's go to the next question. All right, here we are at question 2, again reading the last sentence first. How should these items be treated when reconciling total governmental fund balance to governmental activities net position? Let's go up to the top. A county reported total fund balance of $610,000 in its governmental fund balance sheet. During the year, the county purchased equipment for general governmental use by issuing a long-term note payable. The equipment had a cost of $275,000, and the related note payable had an outstanding balance of $275,000 at year end. So again, how are these going to be treated when we're reconciling from governmental fund balance to governmental activities net position? Are we going to add the equipment and add the note payable? Are we going to add the equipment and subtract the note payable? Are we going to subtract the equipment and add the note payable? Or are we going to subtract both? So based on what we learned in the first question, I think you probably already have a little bit of an idea what we might be doing here. So if you want, pause the video, do the calculation, figure this out, and when you're ready, come back, we'll look at it together. But if not, we're going to go ahead and look at it right now. All right, here we are at the answer. The answer is B. You would add the equipment and subtract the note payable. Now again, based on what we learned in the first question, I think this probably should make sense. So let's go through this. Governmental fund financial statements focus on current financial resources. Again, they're not really looking at capital assets or long-term liabilities. When the equipment was acquired, the governmental fund would generally report the cost as a capital outlay expenditure. If the equipment was financed by issuing a long-term note, the governmental fund would generally report the note proceeds as an other financing source. However, the governmental fund balance sheet would not continue to report the equipment as a general capital asset or the note payable as a long-term liability. We learned that in the first question. Government-wide financial statements report governmental activities using the economic resources measurement focus and full accrual accounting, so kind of more normal accounting that you're used to. Because of that, the equipment is reported as a capital asset and increases net position, while the note payable is reported as a long-term liability and decreases net position. So we're adding the asset, subtracting the liability. Therefore, the equipment should be added and the note payable should be subtracted when reconciling total governmental fund balance to governmental activities net position. So again, not an extremely complicated concept once you understand how the governmental fund balances are treating things and the governmental activities net position is treating things. So now that we know a little bit more about going from fund balance to net position, we're going to start learning about going from change in fund balance to change in net position. I know that's a little bit strange that there's a difference there, but there is a difference. So let's go to question 3 and start learning about that. All right, here we are at question 3. Again, reading the last sentence first. What adjustment should be made when reconciling the change in governmental fund balance to the change in governmental activities net position? Let's go up to the top. A city sold a general capital asset during the year for $90,000. The asset originally cost $150,000 and had accumulated depreciation of $80,000 at the date of sale. So again, what adjustment are we going to be doing when we're reconciling from the change in governmental fund to the change in governmental activities net position? Are we going to add $20,000, subtract $20,000, add $70,000, or subtract $70,000? This is a little bit different than what we've learned about so far. So if you don't know how to do this, that's okay. But if you want to give it a try, give it a go ahead and pause the video, and when you're ready, come back, we'll look at the answer together. All right, here we are. The answer is D. You would subtract $70,000. Now again, this is kind of a newer topic out of the ones we've learned so far. So if you didn't know how to do this, that's okay. We're going to use the explanation to start learning. This reconciliation starts with the change in governmental fund balance. So similar to before where we were starting with the fund balance, we're still starting with the change in governmental fund balance and adjusts it to arrive at the change in governmental activities net position. Governmental funds focus on current financial resources, as we've learned, so they report the cash received from the sale of a general capital asset as an inflow. In this case, the governmental funds reported the full $90,000 of sales proceeds. And that's all they recorded because when they originally purchased this asset, they recorded that purchase of the asset as an expenditure. So that's already been recorded. They haven't been keeping track of depreciation, and now they're selling it, so they're just saying they got $90,000 in cash. And that's how it's working in the fund balance. So now let's go to the governmental activities. Governmental activities use full accrual accounting, so they report only the gain or loss on the sale, not the full proceeds. The asset's book value was $70,000, and that's calculated by taking the $150,000 cost less the $80,000 of accumulated depreciation. Since the asset was sold for $90,000, the government-wide statements would report only a $20,000 gain. the governmental funds increased by $90,000, but governmental activities should increase only by $20,000. So the $70,000 book value must be subtracted in the reconciliation. And the big thing that you need to remember here is just how these are treating it. They're both activities, both pieces of the government are treating things differently. Again, the governmental fund is just treating it as money they got. They got $90,000, kind of similar to cash accounting, but not 100% the same. And then the governmental activities, when they purchased it for $150,000, they recorded it as a capital asset at that time. And then there's been accumulated depreciation over time until now when they sell it and it's worth $70,000, but they sold it for $90,000. But since they were already keeping track of the capital asset and the accumulated depreciation, they are only going to keep track of the $20,000 gain. So compare the $90,000 that the fund balance is going to record to the $20,000 gain that the governmental activities net position is going to record. And so you can see that's how we go from $90,000 to $20,000 is we subtract $70,000 to get to the correct change in net position. So again, just understand the difference on how they're recording things and you'll be able to kind of figure out the rest. Let's go to the next question. All right, here we are at question 4. Let's read the last sentence first. What adjustment should be made for these debt service payments when reconciling the change in governmental fund balance to the change in governmental activities net position? So let's think about this. Think about what we've learned so far. Are they going to add $30,000 for the principal payment and have no adjustment for the interest payment? Are they going to subtract $30,000 for the principal payment and again with no adjustment for the interest payment? Are they going to add both the $30,000 principal and the $12,000 interest payment? Or are they going to subtract both the $30,000 principal and the $12,000 interest payment? So based on what we've... Oh wait, did I not read the very beginning? Let me read the beginning, sorry. A city reported a $42,000 increase in governmental fund balance for the year. During the year, the city made debt service payments on general long-term bonds that included $30,000 of principal and $12,000 of interest. The interest was due and paid during the year. Okay, so now that we've read that part, the options actually make sense. So they had a $42,000 increase in the fund balance. They had debt service payments where $30,000 was principal, $12,000 was interest. So how is this going to be, or what adjustment are we going to be making when we're reconciling from the change in fund balance to the change in governmental activities net position? Now, take everything you've learned so far. I want you to give this a try, pause the video, think through this. If you still don't know how to do it, that's okay. But again, we're kind of building the pieces here. Think about how these two different pieces of the government would treat this and try to figure it out. When you're ready, come back. We'll look at the answer together. All right, here we are at the answer. A, you would add the $30,000 for the principal payment, but you would have no adjustment for the interest payment. So let's learn more about this. Governmental funds report debt service payments as expenditures when current financial resources are used. This means both the $30,000 principal payment and the $12,000 interest payment reduced the change in governmental fund balance. However, governmental activities use full accrual accounting, so principal payments and interest payments are not treated the same way. So underneath, again, governmental funds, they're just counting all of it, the $30,000 and the $12,000 as an expenditure. But things are a little bit different for the governmental activities. The principal payment reduces a long-term liability in the government-wide statements. It is not an expense of the current period. It's not treated the same way. It's not treated as, quote unquote, an expenditure. Because the governmental funds treated the $30,000 principal payment as an expenditure, it must be added back when reconciling the change in fund balance to the change in net position. So again, underneath the governmental funds, they counted it as kind of like an expense or an expenditure, but because the governmental activities isn't going to have that as an expense, you have to add it back. The $12,000 interest payment is not adjusted because interest paid and due during the year is generally reported as an expense in governmental activities and as an expenditure in governmental funds. So it's treated pretty much the same between the two. So there's no reconciling difference in this situation. So the principal is treated differently. Underneath governmental funds, again, it was just an expenditure. Underneath the governmental activities, it's something that's reducing a liability. It's not counted as an expense or an expenditure. So that's why we have to do a change there. But the interest expense is treated pretty much the same between the two. It's an expenditure or an expense. Both ways, it's correct. So they don't have to do a reconciliation. So we learned a little bit more there. Now let's go to the next question. All right, here we are at question 5. Let's read the last sentence first. What adjustments should be made when reconciling the change in governmental fund balance to the change in governmental activities net position? Let's go up to the top. A city sold a general capital asset during the year. The following journal entry was prepared for the sale in the governmental activities accounts. So they debited cash for $64,000, debited accumulated depreciation for $36,000, credited capital asset for $90,000, and credited a gain on sale of capital asset for $10,000. So again, what adjustment are we going to be making? This is similar to question 3, but now we're looking at it through the journal entry lens. So pause the video if you can, or if you want, think about this, and when you're ready, we'll look at the answer together. All right, here we are. The answer is D. You would subtract $54,000. So let's go through this to kind of understand what's going on here. Governmental funds report the proceeds from the sale of a general capital asset as an inflow of current financial resources. In this case, the governmental funds increased by the full $64,000 cash received. So this is what the governmental funds is recording, just this $64,000 of cash. In this case, the governmental funds increased by the full $64,000 of cash received. Governmental activities, however, was using full accrual accounting and report only the gain or loss on the sale of the asset. The journal entry shows that the asset had a cost of $90,000, and then it had accumulated depreciation of $36,000, so its value was $54,000. Since the asset was sold for $64,000, there's that $10,000 gain. The governmental funds increased by $64,000, but the governmental activities should only increase by $10,000 from that gain. So the $54,000 book value of the asset must be subtracted in the reconciliation to get to the correct number. So again, essentially, the way we're looking at this is the amount that the governmental funds recorded, just the $64,000 cash. But then everything else is still relevant for the governmental activities. We know that the asset cost $90,000. We subtract the accumulated depreciation, giving us $54,000. And that's how we can see where this gain came from, because it was worth $54,000, but they had $64,000 cash. So compare the two, and that's a $10,000 gain. But then again, because we're going from governmental fund or changing governmental funds to changing governmental activities net position, we have to go from the $64,000 down to the $10,000, and that's why we subtract $54,000. So with that, we've learned quite a bit in this video about reconciling governmental funds and governmental activities net position, and change in governmental funds and change in governmental activities net position. Now, before we do anything else, let's do one more part of the SuperFast CPA process called pillar topics. Now, as a quick reminder about pillar topics, the idea here is as you're going through the questions to learn the material, you will notice the things that keep popping up, the same equations or the same ideas or concepts that you've seen between multiple questions. And so you take a moment and pull out that understanding, that concept in your own words, so that you know the key things that you were supposed to learn from the questions. And that's why we're able to do the questions first approach instead of watching the lectures or reading the textbook, because we're still able to pull out the key ideas from the questions. And that's why we do the pillar topics. So let's go ahead and take a look at the pillar topics for this video. All right, here we are at the pillar topics. Again, kind of a summary at just the basic ideas and concepts that we just learned. So let's go through this. First, governmental funds focus on current financial resources. That's something we talked about a lot, and we talked about it a lot in the previous video too. While governmental activities report the full economic picture using full accrual accounting. Again, something we've covered. Because of this, the reconciliation is really about adjusting for the assets, liabilities, revenues, and expenses that are treated differently between the two sets of statements. And that's the very basic idea right there. Just remember how governmental funds treat something compared to how the governmental activities treat something, and that's where you're going to be able to start making those reconciliations. Governmental funds do not report general capital assets or long-term liabilities on the fund balance sheet the same way governmental activities do. To reconcile fund balance to net position, capital assets are generally added, while accumulated depreciation and long-term liabilities are subtracted. When reconciling change in fund balance to change in net position, the key is to reverse items that governmental funds treated as current period inflows or outflows, but governmental activities treat as long-term items. Capital outlays and principal payments are generally added back, while debt proceeds and depreciation are generally subtracted. Governmental funds usually report the cash received from selling a capital asset as an inflow of current financial resources. Governmental activities report only the gain or loss, so the book value of the asset sold is subtracted when reconciling change in fund balance to the change in net position. Again, the big idea here is understanding how governmental funds is treating things and how governmental activities net position is treating things. Really, it's knowing the different accounting focus. One is current financial resources, one is the full economic picture with full accrual accounting. So if you can remember that, that's where you'll be able to start making those reconciliations between the two. Now, that is the end of the YouTube version of this video. Again, we only went over 5 questions in today's video, but if you want to get access to the full 10 question versions of these videos, go to SuperfastCPA.com and sign up for our free 1-hour webinar training. We will teach you the key ingredients to passing the CPA exam, And after that, you'll have a much better path or idea of how to learn about and become a member of SuperfastCPA CPA by purchasing the study materials or purchasing the pro course, or of course, purchasing the total bundle that has everything. And the 10 question versions of these videos are currently part of the pro course, but we are going to be moving those to the study materials. So if you purchase the study materials or the total bundle, you'll get access to the full 10 question versions of these videos. Now, I hope this video was helpful. Thank you very much for watching. If you liked it, make sure to like it and leave a comment, and I will see you in the next video.